This is the Asia Trade. I'm Shery in Tokyo.
And I'm Annabelle Droulers in Hong Kong. The top stories this hour. A cautious start ahead to the trading week, with investors seeing a Fed rate cut on Wednesday as a sure thing. But stubborn inflation and tariff turmoil could still spoil the party. US-China trade talks heading into a second day in Madrid, with trade and TikTok on the agenda as Beijing launches anti-dumping investigations into US chips. And China's August activity data out today set to show further weakness as policymakers assess the need for additional stimulus.
It's a very busy week ahead. Of course, you said it, Belle. We are getting started with the Federal Reserve decision. Then we're moving on to Bank of Canada. Then we have the Bank of England. And we're wrapping up the week with the Bank of Japan. And divergent monetary policies as well. The BOJ expected to hold rates steady. The first hike expected by more than 30% of economists surveyed by Bloomberg to come in October. But the Federal Reserve, yes, a rate cut is expected on Wednesday. Will it be a unanimous decision? In July, there were two dissenters. Now Governor Waller wanting to see multiple cuts by year end. And with the focus on the jobs market, a slowing set of data, that will be key in deciding what comes next.
Yeah, that's right. I mean, you said it there. It's really that story of dissenters, perhaps, that we're going to see, because you've got some officials that are saying they don't want to see any rate cuts, and then others are calling for a larger move. But, I mean, 25 basis points is pretty much the done deal. Could we get 50 basis points? Are we heading into an easing cycle? Is this sort of going to be that question, one and done? You have seen those bets continuing to increase after those inflation figures have come through. I mean, sticky inflation, a slowing labour market as well. And you can't forget, above all of this is really President Trump and the pressure that he's putting on policymakers as well. I mean, we just heard him, for instance, on his way back to the White House from Morristown in New Jersey. But essentially, he's saying he expects a big cut from the Fed this week.
Yeah, we really can't separate the political noise from the monetary policy decisions, right? I mean, they're supposed to be independent, but here in Japan as well, given that we are headed towards another election, we are watching what the BOJ does next. Japanese markets closed on holidays, but we've been watching the Japanese yen, especially that weakening against the US dollar for the last 3 weeks, and that's boosted Japanese stocks higher. We are watching eco data out of China today as well, another slowing economic data expected from the month of August. But it's really been about the Kospi story, right? The South Korean market has been on a tear. Take a look at this chart comparing really the rally with the Kospi of more than 30% this year. And you have seen the U.S. markets also gain with the S&P 500 more than 30%. We're talking about a $14 trillion everything rally for the U.S. But given the gains in South Korea, really dwarfed by that market. Of course, we have just heard in the last few minutes that South Korea is scrapping its plan to lower the threshold for capital gains taxes. What that means is that large shareholders would have gotten taxed more had that plan not being scrapped. But the South Korean government really headed towards that corporate reform direction, with President Lee wanting to see the Kospi at 5,000, that we might see a little bit more upside on the rally today, although, Belle, a lot of it has already been priced in the last few sessions.
Yeah, but as you said, it's that really big focus as well on the Value Up program. But let's get to our top story here. US and Chinese delegations set to resume talks in Madrid on Monday. That's after a first day of meetings covered issues including trade, the fate of TikTok in the US. President Trump has just spoken about the progress in the discussions.
We had talks going on. Scott Bessent is there and some others. Jameson is here. And, yeah, I think they're going fine. You know what China is paying right now in tariffs? Huh? A lot.
All right, let's get more on this now, bringing our Chief North Asia correspondent, Stephen Engel, in Hong Kong. So, I mean, President Trump sounds pretty optimistic about how they headed out of day one, but what have you made of the discussion so far?
Well, the fact that TikTok was so high on the agenda was interesting, because there is a deadline this week that was imposed by the United States to find a solution to keep TikTok operating, or, as Donald Trump said, we just might let it die in the United States. It's up to China, is what he says. So again, there's a very pressing deadline right now, and also it's potentially a deliverable for a Xi-Trump meeting later in October. I think these talks in Spain that lasted nearly 6 hours today will start again, according to Scott Bessent, early in the morning on Monday in Europe for a second day. We don't know how many hours, but it's really laying the groundwork for a potential meeting between Trump and Xi. Could that be on the sidelines of APEC in Korea? Could it be in between the ASEAN meetings and APEC as a separate trip to China? We simply don't know. They're trying, I would guess, lay the groundwork for that meeting. And again, with all the difficulties of trade, and keep in mind, there's a 90-day truce that is ticking down as well till, I think, November 10th is when that expires. So there's a lot of contentious issues on trade. There's contentious issues on national security. And, of course, TikTok is one that they can't seem to find common ground on. So finding deliverables for both nations for a summit is going to be very difficult.
Yeah, you said it, right? I mean, the backdrop is pretty challenging. China now announcing 2 investigations in the U.S. semiconductor sector. What do we know?
Well, this came right on the eve of those talks in Madrid, so it potentially could have started off on a rocky footing because, keep in mind, China, had launched these 2 probes just after the United States added 23 companies to its entity list, which essentially designates a company or an entity as being a threat to U.S. economic or national security interests. 32 companies in total, 23 of them Chinese companies. But then right on the heels of that, China on Saturday launched 2 investigations, according to the Ministry of Commerce, one into anti-dumping probe related to certain U.S.-made analog integrated circuit chips, IC chips, the sort of products that are sold by Texas Instruments as well as analog devices. They're not the cutting-edge chips, but they go into everything, and China buys a lot of them. They go into EVs, they go into smartphones, they go into medical imaging. So this potentially could be a thorny issue. The other investigation is an anti-discrimination probe into the overall moves by the United States to restrict the sale of chips into China. So we'll have to see how these play out. Again, that entities list that I mentioned earlier, 2 companies of note that have been added to the U.S. Entities list are Shanghai Fudan Microelectronics and Sino IC Technology. So again, there are contentious issues, as you rightfully said, Shery, that don't make these talks easy. But again, I think they're trying to find some common ground to have deliverables for that expected meeting between Xi and Trump, if not in a summit, then on the sidelines of APEC.
Yeah, it'll be a busy October and November, right? Chief North Asia correspondent Stephen Engel there joining us from Hong Kong. Now, we're also following the latest on the U.S.-South Korea relationship. Washington expressing regret over the detention of hundreds of South Korean workers. Speaking in Seoul, Deputy Secretary of State Christopher Lando says the workers will face no disadvantage when re-entering the U.S. Over 300 South Koreans returned home on Friday on a charter jet after being swept up in a raid carried out by U.S. immigration officials.
Yeah, Shery, let's get more on the trade headlines driving markets as well as this week's central bank decisions. Joining us now is Louise Loo, lead economist at Oxford Economics. And Louise, thanks so much for joining us this morning. I mean, it's really a lot to contend with right now. Not only are we really influenced, of course, by these ongoing trade headlines, not just between US and China, Korea and the US, I mean, many other nations as well conducting these negotiations ongoing. But at the same time, we're looking at the first Fed rate cut of 2025, a slew of central bank's decisions this week as well. What's standing out to you the most right now? What's going to be most important for you this week?
Well, there are a lot of data points, a lot of things to follow this week. Well, first up today, we have the China data. I think the conclusion there seems to be that we should be looking at further weakness. That should set the stage quite nicely for further domestic easing by the Chinese authorities. And then further down the week, we have a number of central banks in Asia, that all of which we expect to stay on hold, all for different reasons. The Bank Indonesia one will be particularly interesting, just because of the domestic political pressure that we we're seeing over the past week. With Fed easing, you would have thought, maybe a few months ago that this would have been an easy decision for them. But clearly, I think where most market analysts, including ourselves, are expecting is a hole in the meeting just because of the market volatility that they're contending with.
What about the Fed, though? I mean, as we said, it's expectation around the first Fed cut this year. I mean, how significant then is that going to be for the central banks in this region, especially when at the same time we're monitoring that yuan appreciation that is supporting a lot of emerging market currencies? Yeah,
that's right. So I think going into this first rate cut, this from the Fed, we are seeing a lot of negative rate differentials with a lot of the Asian central banks in the region. So that's contrary to what we see in the headline currencies. That has actually been a bit of an anchor for the currencies in the region. So to the extent that that the Fed is easing rates, that is actually positive news for a lot of central banks here who are in the coming months, possibly having to contend with slowing growth, the fact that disinflation has been tapering off a little bit and plateauing at about 2%, 1.5%. Those are pretty low inflation prints, but central banks in the region are looking to be a little bit more dovish, to lean towards an easing bias to support the economy, given the trade uncertainties are finally settling in. So I think the Fed cutting rates by 25 bips or perhaps even 50 bips, that would be pretty good news for the regional central banks.
But Louise, let's back out a little bit. Are we correct in assuming the Fed is now firmly on an easing path? Because markets are pricing in the fact that perhaps the focus will be much more on the jobs market slowing down. We still have inflation to contend with. So what happens after the first 25 basis point rate cut?
Yeah, I think the way we have characterized the Fed cutting cycle this time around is one of normalization rather than easing. You're right. The jobs report obviously is not comforting, but the jobs numbers that we see does imply that deterioration in trend job growth has been more gradual than we thought before. So that's positive news, as positive as you can pick from these numbers. And the fact that inflation is not really on a very clear path towards 2%. I think that sort of dynamic is really forcing the Fed to be a little bit more cautious than maybe the outright 50 bips that some parts of the markets are expecting. So given that, I think that the calculus is really towards the Fed moving rates very gradually towards neutral, which we think is about 3.1%, with that starting with that 25 bits that we were likely to see in September, and maybe perhaps another 25 in December.
And Louise, also very consequential when it comes to the global bond markets has been the Bank of Japan as well, especially with JGB yields in the long end surging. What are we expecting in this week's decision, and when could we expect the first rate hike?
Yeah, well, so in the case of Bank of Japan, the calculus there is really whether or not economic activity is going to be strong enough. We have seen some signs of reflation in recent quarters, so that's positive. But in general, we think that the peak tariff shock to the economy is going to come towards the second half of this year. So the Bank of Japan, in our view, is likely to stay put for a while. And our view, our Japan economist view, is that the central bank will start hiking again only in the second half of next year.
What does that mean for the Japanese yen? I mean, Annabelle just brought up the yuan's anchoring role when it comes to emerging markets, but the Japanese yen has also been really range bound. And what does that mean for the other side of the trade with the US dollar as well?
I think the fact that given that the Fed is going to be cutting rates, rate differentials are in favor of the yuan. And so therefore, you should expect some appreciation bias in the quarters ahead. Now, having said that, I think there's a lot of volatility in the market to sieve through, to work through. So it may be the case that, the dollar might find its footing again towards the end of this year, next year, and that should be a little bit of a boon for the economies, for the regional currencies out here in Asia.
Louise Loo, good to have you with us. Lead economist at Oxford Economics. Of course, a very busy week ahead, and coming up on the Asia trade, we'll break it all down for you. More on this week's BOJ decision with former Deputy Governor Masazumi Wakatabe. OCBC tells us why they're optimistic about Asia ex-Japan equities, and the ANZ unpacks the outlook for gold. Much more ahead. This is Bloomberg.
Tesla's board chair says nobody other than Elon Musk is capable of leading the company's transition into artificial intelligence and robotics. But Robin Denholm told Bloomberg it's possible Musk may move out of the CEO role. Let's get more on this exclusive interview with Bloomberg Tech co-anchor Ed Ludlow. And Ed, firstly, thanks for joining us. But secondly, it was a really great and very wide-ranging interview, all the way from this possible leadership change, compensation package, political goals as well, or ambitions, activity. What were the key takeaways for you?
Yeah, that Elon Musk is the only option in the context of this future vision where Tesla is focused on robotaxi and Optimus. There's something important that the global audience needs to understand, that this unprecedented comp package, $1 trillion all told over a decade, was put together and negotiated by a committee of just two people. One of those people was Robin Denholm, and the other was board member Kathleen Wilson-Thompson. So bear that in mind. We discussed Musk's politics. It was unusual. I've covered the company closely a lot, and I was surprised to be in the building, frankly. But the best way to understand it is to listen to what Denholm had to say. Take a listen.
It is a pivotal time at Tesla and also in the world. AI and autonomous and the application of AI is transformative technologies. And we believe at Tesla in big, ambitious goals. Elon put out the Master Plan 4 on the 1st of September, very auspicious day, I think, in terms of putting out the vision for the company for the next decade or more. And AI and autonomous is at the front and centre of that, both in the vehicles but also in our Optimus lineup and what we're doing from a robotics perspective as well. And so having the board's responsibility is to look at who the CEO is for the next period of time. And we believe that Elon is the right CEO for Tesla over this transformative period of time. And our view is he's a generational leader. There aren't any other people out there like Elon who can actually lead the company over this next decade or so. And so once you decide who the leader should be, you need to put in place a compensation package to incent and motivate him to actually deliver against the ambitious goals.
The motivational piece is interesting. In the course of the proxy, as you read it, a negotiation plays out, doesn't it?
Yep.
7 or 8 months. But there were sticking points on both sides. What were they?
Well, obviously, in any discussion around the future of the company, but also the future of an individual in terms of what motivates them, it's very important to understand that. And from a board perspective, from a special committee perspective, as we've outlined in the proxy, we had a very fulsome process. We had more than 10 meetings with Elon in terms of understanding what were his motivations, what does he want to do over this period of time. And having worked with him now, I've been on the board for 11 years, and Kathleen Wilson-Thompson, our other amazing special committee member, has also been working with him for the past 6 or 7 years as well. And so from our perspective, seeing him in the boardroom, but also understanding what motivates him, it's things that other people can't do. It's what the company could do that no other company could do. So those types of things are what are in this plan. And so, as you said in the outset, it is a zero compensation package unless he delivers against pretty ambitious goals for the company.
So in those 2 minutes, it's pretty clear Elon Musk is it, right? And something that Denholm goes on to say in what was a 25-minute discussion is that these are not goals or sort of negotiable, in the sense that if Musk doesn't achieve every single one of the targets set, he doesn't realize the full comp. And the comp there's this like big headline of 1 trillion all told. But Musk's motivation was voting power. And to get that voting power, he really needs to go all the way through a decade plan. He needs to participate in succession planning. And so I would say that's the other main takeaway. Musk might be it. They might have absolute belief that he's the only person that can do it. But Denholm did confirm that there are contingencies in place if Musk were to leave tomorrow, and they know full well who within that company could step up if needed to. And as we ran the story about, it doesn't need Musk to be CEO. You know, he likes to get hands-on, so to speak, with the tech. So maybe he'd find another role when the administrative side of things goes to someone else.
And when it comes to the sales performance of Tesla, we have seen it under pressure, especially because of Musk's political involvement. How does she justify that?
I have to be honest that, Denholm didn't answer the question. So when the proxy hit, it was very clear two things. One, the board, quote, got reassurances Musk would wind down political activity. So we said, Ms. Denholm, define political activity. Do you literally mean that Musk cannot have an official role in government or back a specific party or make donations? And what she said is that actually what Musk wants to do politically is up to him. America is a free country in that sense. And so that would indicate that the board's position is they just don't want to see Musk going back into a formal government role. The other thing is the proxy included, with all the sort of glamorous robo-taxi and robot stuff, the target of delivering 20 million vehicles. And what Denholm explains, and I encourage the audience to watch the full interview because the context is important, is that, yeah, we absolutely want Elon Musk to focus on the bread and butter business because it helps finance the pathway towards those other goals. I asked her, do you have data that Musk politics impacted sales? I don't think she really answered the question.
And great conversation, and thanks for breaking it down for us. Bloomberg Tech co-anchor Ed Ludlow there joining us from San Francisco. We have more ahead. This is Bloomberg.
The latest from the corporate front this morning, and Bank of America is reshuffling its senior leadership, narrowing the field of potential successors to longtime CEO Brian Moynihan. Dean Athanasia and Jim DeMare have been named co-presidents, reporting directly to Moynihan. Alistair Borthwick remains CFO and adds the title of Executive Vice President. Moynihan has said he plans to stay on as CEO through the end of the decade. Sony's Demon Slayer has set a new box office record for Japanese anime in the US and Canada. The film brought in $70 million, surpassing the previously $31 million record set by Pokemon in 1999. Based on a Japanese comic book series, Demon Slayer had already grossed about $280 million worldwide going into the weekend. Bloomberg's learned that Brookfield Asset Management is in talks to acquire US landlord Yes Communities from Singapore's sovereign wealth fund, GIC. Sources say the entire portfolio could be valued at over $10 billion. Denver-based Yes is among the biggest operators of manufactured housing communities in the US. And we'll have plenty more ahead on the Asia trade. This is Bloomberg.
Take a look at how we're setting up for the market opens across Asia. Of course, we have seen that everything rallying U.S. stocks at record highs. We're talking about the Nasdaq 100 also at its highest or longest streak of gains in more than a year. And we have seen treasuries gaining ground all of last week. 4 weeks of gains for treasuries, 10-year yield at the lowest level since April. And we'll be watching the future space in the bond space today, given, of course, that we are headed towards not only the Fed rate decision, but also the Bank of Japan Japan, as we have seen long-end yields in Japan also gaining ground, and that curve is steeper than most major developed economies. But a key question from here on out is whether the Fed will push back against market bets on a series of rate cuts extending into next year. Let's bring in Bloomberg MLive strategist Mark Cranfield for this. And Mark, of course, therein lies the risk for markets, right? I mean, it's been so priced in. Could we see a surprise that could derail this everything rally?
Yeah, certainly if you get an unexpectedly hawkish press conference from Jerome Powell this week, then certainly that would upend quite a few markets. That's really not something that people are counting on too much. If you look at the way that equity markets are grinding higher, Treasury yields have generally been coming down in recent weeks, and the dollar a little bit softer. All of those markets are positioning is skewed quite in one direction towards the fact that they expect the Federal Reserve will continue to lower interest rates at least the next 3 meetings, starting with this week and probably into early 2026. Now, one of the reasons why markets are fairly confident is not just because of the recent data, unemployment data especially has been much weaker than expected, but it's also because they expect the personalities to change within the Federal Reserve, which will mean the narrative is very clearly skewed towards keeping those rate cuts going. So we have the confirmation hearings for Stephen Menon today from the US Senate. It's quite possible that he will be confirmed and be able to join the Fed meeting this week. Now, Menon clearly is very closely aligned with President Trump, and you would expect that he will be a very vocal voice within the Federal Reserve for bringing down interest rates quickly, and probably at least as much as the market is expecting. Now, that's partly why people are thinking that a 50 basis points rate cut could be on the table for this week. Now, the discussion, it probably would have happened anyway, because there are members of the Federal Reserve who are candidates to be chairman of the Federal Reserve. They would like to impress their potential new boss, so they're probably going to put that on the table. 50 basis points is surely going to be discussed. It may not happen. They may only cut by 25, but that clearly will be reported into the traders complex as well. They will see that. They'll understand what it means for the future. So it would be a real shock if we get a hawkish decision, a rate cut, but a hawkish outlook from the Federal Reserve. People are very much counting on the fact that the Federal Reserve will endorse further rate cuts to come. And that's partly why volatility is relatively low across bonds and equities especially.
And Mark, I think, you're talking there about the confirmation hearings you might have this week, and sort of the allegiances as well to President Trump. I mean, he was just this morning saying that he expects a big cut this week. So how does also that big question of Fed independence play into the market reaction to whatever outcome we get from officials later today, or rather Wednesday?
Yeah, I think investors have got used to the idea now that there are very strong external voices coming to affect what's happening with the Federal Reserve. So whether or not you call that Fed independence or not, investors have started to price in the idea that the people within the Fed themselves, Jerome Powell, is not the only decision maker here. There seems to be an external narrative. And don't forget, they're likely to announce that the next Fed chairman pretty soon. They may well coincide it with this week's decision as well. That adds further pressure on the people who are currently within the Federal Reserve. There's going to be no let-up in the external forces trying to sway Fed decisions. It's an unusual situation. Investors haven't had to factor this in really for many, many years. Maybe it's the first time there's been this degree of external pressure on the Federal Reserve, but they're going to have to live with it for some time. And that's partly why traders are pricing in a whole series of interest rate cuts. It's a dynamic which you have to take into account along with the data which is coming out. You have to assume there will be a lot more voices outside the Fed who have a big influence on where policy will go.
All right, Mark, I'm sure we're going to be hearing a lot more from you over the coming days. That was our MLive strategist, Mark Cranfield, there talking about these expectations for the Fed later this week. And, of course, the movement that we're seeing in 10-year Treasury certainly as well plays into the dynamics around oil prices. But this morning, it's fairly steady so far. It's been interesting as well to sort of note oil sitting below its 100, 200-day moving averages, even as we see ongoing geopolitical pressures, not just in the Middle East, but also what's happening with the war in Ukraine. And to that end, President Trump has repeated his call for tougher sanctions on Russia, saying that Europe must stop buying its oil. Let's bring in Bloomberg's Michael Heath. And Michael, I mean, it certainly seems like the stage is being set, at least from the US side, for tougher sanctions on Russia. But it's a big question whether Europe and the EU can really follow suit.
Yeah, that's right, Annabelle. I mean, President Trump has said this on a number of occasions, sort of made threats and set deadlines that basically have come and gone without much happening. Trying to get Europe on board makes a degree of sense, but the problem is that the countries that buy the oil are countries like Hungary, where exemptions were made for them when the first rounds of sanctions were put in. Excuse me. And those countries are actually quite close to President Trump. You know, Hungary's leader you'd almost call him a European MAGA kind of thing, or you could. So it's almost a factor that President Trump getting on the phone to those leaders could actually be more influential. But with President Trump sort of trying to put together a coalition to do this with Russia, it seems like we may get some action. And they're sort of looking at targeting, you know, oil, the shadow fleet, these areas where Russia really does make its money.
Yeah, Ukrainian drones now targeting Russian oil assets. What's the latest on the fighting there?
Yeah, Ukrainian drones targeted a refinery in Leningrad region, which is outside of St. Petersburg, about 100 kilometres southeast of St. Petersburg, and 800 kilometres away from Ukraine, which sort of shows the range that they've got there. And they also targeted some facilities, reportedly at least, in Perm, which is the Urals Mountains. You know, we're talking 2,000 kilometres away from Ukraine. So they've really managed to extend the range, and they're obviously trying to target Russia's economic assets there to come back against, I guess, you know, Russia's targeting of civilians in Ukraine, I mean, civilian areas like Kiev, just trying to put some pressure on Russia's economy here.
Bloomberg's Michael Heath there with the latest on those ongoing geopolitical tensions. And the other stories that we're following on geopolitics as well, Israeli Prime Minister Benjamin Netanyahu is downplaying tensions with the U.S. after last week's strike on Washington's ally Qatar. Netanyahu touted the strength of Israel's relations with the U.S. as he welcomed Secretary of State Marco Rubio for a visit. Rubio earlier said he would discuss the attack on Doha with Netanyahu and its impact on President Trump's goal of ending Israel's assault on Gaza.
I think his visit here is a testament to the durability, the strength of the Israeli-American alliance. It's as strong and as durable as the stones of the Western Wall that we just touched under President Trump and Secretary Rubio and their entire team. This alliance has never been stronger.
Australia will spend about $8 billion on a new defense hub near Perth to build Navy ships and dock nuclear submarines. Prime Minister Anthony Albanese says the project will create 10,000 jobs and strengthen the AUKUS security pact. It marks the biggest peacetime increase in defense spending in the nation's history as Canberra seeks to shore up Trump administration support for AUKUS. We have more ahead on the Asia trade. This is Bloomberg. Take a look at how the Japanese yen stands right now. We have seen 3 weeks of losses against the U.S. dollar. Japan away on holidays, but of course it's a big week for Japan. We are expecting the Bank of Japan to hold rates steady. More than 30% of economists surveyed by Bloomberg expect the next rate hike to come in October. Key inflation data here in Japan has stayed above the BOJ's 2% target for more than 3 years now. We continue to watch the Bank of Japan as officials think it may be possible to raise rates again this year, regardless of domestic political instability, according to sources speaking to Bloomberg. Joining us now is Masazumi Wakatabe, professor of economics at Waseda University. He previously served as a BOJ deputy governor. Always great to have you with us, and thank you so much for coming in on a holiday.
Well, thank you very much.
So no change expected this week, but do you expect a move later in the year?
Yeah, it's very difficult to say. But you said that the current inflation rate is above the target, but BOJ maintains that now the inflation rate is 3.1. But more or less like the underlying inflation rate is below 2%. So that it looks very difficult for the BOJ to raise interest rates right now. But I think that if they feel that their predictions are vindicated, then that they may change something. Yes, this year, okay, but not this month, September. I think that the October is a logical choice because they are going to release the outlook report at the same time as they decide on the rate.
And we will have the presidential election of the ruling LDP as well. We are now just hearing from local media that Chief Cabinet Secretary Hayashi will announce his entry in the race tomorrow. We're also seeing the latest Yomiuri poll showing that Sanae Takaichi leads the LDP race at 29%. And we know how pro-easy money she is. How do the politics change the calculation for the BOJ?
Well, I think that if Ms. Takaichi is elected as a leadership, LDP leadership, then the BOJ may feel some pressure for whatever they're doing. But let me say two things. This election, no matter what happens, that the LDP is in a minority position. Okay, so that they're going to have to form an alliance with other opposition parties. So that's a choice, and that really depends on how the economic policy would look like. So suppose Ms. Takaichi is going to be elected, then the natural candidate for her alliance is Kokumin Minshito. That's the Democratic Party for the People. Okay, so if Mr. Koizumi, for example, is elected, the natural candidate would be Ishin no Kai, Japan Restoration Party. Then that we are going to have some different sort of macroeconomic views.
Differences, but does that still mean more government spending? And if that's the case, how much will that help the economy, which you think when underlying inflation is still weak?
Right, and also we're going to have to remember that Trump tariffs, the impact of those tariffs will come later this year. Hasn't yet happened, but now it's eroding the corporate profitabilities, especially for the automobile industry. And Japan's automobile industry has a lot of sort of spillover effect. So that towards the latter half of this year, that we are going to see some contraction even, stagnation at best. Then that we can make some case for fiscal stimulus and even monetary easing.
So Masazumi, I mean, we're also going to get later in the year the start of those early wage negotiations as well. Given you do have that impact of tariffs, maybe some cost push inflationary pressures as well, how do you expect that to then factor into those negotiations and possibly influence the BOJ as well?
Well, you mean that in terms of the wage negotiation, that the corporate profitability must be maintained. And, for example, the Toyota Corporation is notoriously, that's the aggressive in cutting costs. So that's if the current momentum is not going to be kept as the Trump tariffs would affect the economy and the automobile industry, the next wage negotiation may be affected. So that that's what one of the factors which the BOJ is now worrying about.
What about the impact of the Fed as well? I mean, this week we're expecting the first cut for 2025 from Fed officials. It's very unclear, of course, the path of easing, if we're even going on a path of easing from the Fed as well. How do you expect that to impact officials in Japan?
Not much, I would say, because suppose the Fed raises the interest rate, lowers the interest rate. That would mean that the appreciation of the Japanese yen. So that would, ease the sort of tension regarding the FX. There has been a rumor that the BOJ has been concerned about the FX movement. But if the FX, the Japan's yen appreciates a bit against the US dollar, then the BOJ doesn't feel the more pressure on moving based on the FX movement.
The Fed cutting could mean also stronger demand from the U.S. with a recovery over there. And you mentioned also how the tariffs would take effect later, the impact in the Japanese economy. But then at the same time, capex doesn't necessarily change from these large companies here in Japan. They're still investing. So as long as they're still investing, as long as they're increasing wages, and as long as the U.S. economy stays strong, what will be the rationale for the BOJ not to continue hiking rates after October?
Right, that's right. So that's these factors are the sort of best case scenario for BOJ's prediction. So that's
which is kind of sort of realizing right now. No?
Well, I mean that's it takes a little bit time for the interest rate cuts in the United States to have an effect on the U.S. economy. U.S. economy is kind of slowing down right now. So they have a kind of lag for the monetary policy to be effective down the road. So, but the tariff impact would come, I think, a little bit earlier. So that's we see some sort of a timing issue. And so for the Japanese economy, clearly, I think that the downward risks are bigger than upward risks for the latter half of this year.
More so, though, if inflation continues to rage, making Japanese households feel poorer?
Well, here is a cost push factor, and I said that the current inflation rate is 3.1. The underlying, I think that the U.S. type core CPI is 1.6. Okay, so that's the difference is more like the rise in the rice price, for example, and we are actually expecting the increased the food price will come down towards the latter half of this year. So that's actually according to the BOJ's estimate, the predictions. So if that's the case, that the inflationary pressures will ease down a little bit. Yeah.
Masazumi Wakatabe, good to have you with us on this Japanese holiday. Thank you so much for coming out, former BOJ Deputy Governor, as we head towards that Bank of Japan policy decision on Friday. And catch Japan Ahead every Monday at 8:40 a.m. If you're watching in Tokyo, subscribers can watch live on the terminal using the TV Go function. This is Bloomberg.
Well, ANZ shares will be in focus when Australia opens for trade at the top of the hour. That's after the bank was fined $160 million by the country's securities regulator for so-called widespread misconduct. Bloomberg's Paul Allen joins us now with more. So, Paul, I mean, what exactly is ANZ being fined for? And is this sort of level of fine also expected or unprecedented?
Yeah, this is the largest single fine of this nature by the regulator against a single entity, and $160 million US. It's substantial, and it relates to 5 separate matters, the best known of which is ANZ's role as a bond duration manager for a 10-year government note back in 2023. ASIC found that it overstated volumes by tens of billions of dollars over a period of 2 years. ANZ argues that there was no loss to the Australian Office of Financial capital management, but that obviously didn't make any difference to the outcome. The other matters related to, matters that impacted 65,000 customers, and it's familiar to those who remember the Royal Commission into misconduct in the banking industry from a few years ago. ANZ found that it failed to respond to customer hardship notices, it made false and misleading statements on savings rates, and also failed to refund fees that were charged to dead customers. So the ASIC chair, Joe Longo, said that ANZ acted unconscionably and that time and time again ANZ has betrayed the trust of Australians.
So how is ANZ responding now?
Well, ANZ admitted to all of this as well. It did admit that it had engaged in what the ASIC called widespread misconduct, and then went on to engage in what in PR circles is known as a mortification strategy, basically falling on its sword, admitting the wrongdoing. The CEO, Nuno Matos, said these failings outlined are simply not good enough, and they reinforce the case for change. Now, there's certainly been plenty of that under Nuno Matos since he became CEO of ANZ. He's even got his own moniker now, known as Nuno Geddon, for all the changes that he's engaged in since he took the top job. Last week, ANZ moved to slash 3,500 jobs, of course, and the news of that leaked out back in August, forcing that restructure to be brought forward. But there's been a senior management shake-up and risk and compliance as well. And just last week, he said the goal is to, quote, get our house in order. Look, we will be watching shares at the open, obviously, but so far, the market really likes what it's seen. ANZ shares up about 16% year to date.
Paul Allen there joining us from Sydney. And of course, it's a busy week ahead with central bank decisions. And take a look at this incredible rally that we've already seen in global equity markets, with the S&P 500 gaining more than 30% from its April lows. Could we get higher? Well, history favors U.S. equities in the first 3 months after the Fed's first rate cut of a cycle. Since 1989, in 6 cycles, not tied to a recession, U.S. stocks have risen a median 8% during that time. China has historically lagged, and we have seen India and South Korea also delivering strong median gains, except for 2024, where they had idiosyncratic stories. But China is typically the laggard. And back in 2024, though, we saw domestic stimulus taking China higher, but usually China lags a Fed rate cut boost that we get on the S&P 500. So we are starting this week with that decision out of the Fed on Wednesday, also Bank of Canada, Brazil. Then we go to the Bank of England, Norges Bank on Thursday. Then we have the Bank of Japan wrapping up a very busy policy week on Friday. Japan, though, away on holidays today. Do watch out for the Japanese yen, which has weakened for 3 weeks against the dollar. Market opens in Sydney and Seoul are next. This is Bloomberg. Trade, we're counting down to Asia's major market opens and a countdown to all policy rate decisions across the world today. Belle, we're talking about the Fed starting us off on Wednesday. Of course, a rate cut very much expected. Will it be unanimous is a key question after 2 dissenters back in July and Governor Waller now wanting multiple cuts this year. Of course, we have seen a softening labor market. Will the Fed focus on that is a key question.
Yeah, exactly. A softening labour, but you've still got sticking inflation. So as you said, it's really that key question. Are we kicking off an easing cycle, or is it just sort of going to be one and done? But you've also got immense political pressure, and Donald Trump saying he expects a big cut from officials. But market open, of course, in South Korea and Australia.
Yeah, Japan away on holidays, and of course that's another big rate decision this week. The BOJ expected to hold steady, but you said it, South Korea, the market coming online, and take a look at those gains that we have already seen this year of more than 30%. We finished at another record high on Friday, and the comparison with, say, the Saudi Tadawul index is huge. Look at that. We're talking about a 650 basis point lead that South Korea, the best market in the world today, has over the Saudis benchmark benchmark index, really that excitement over oil diminishing, of course, the oversupply concerns in that market weighing on oil and energy shares as well. Also, you have geopolitical premium, but that really being offset by the oversupply outlook in the oil markets. On the other hand, when it comes to South Korea, they've just killed a plan to lower the threshold of large shareholders subject to taxes to 1 billion won. What that means is that President Lee Jae-myung wanted the Kospi 5,000, wanted those corporate reforms. We might be going in that direction. In fact, President Lee also right now in a briefing, his spokesperson saying that South Korea is in talks with the U.S. on the tariffs. They're taking into account the Forex impact. Remember, we have seen some of those diplomatic tensions between the U.S. and South Korea lessen a little bit, as well as the U.S. Deputy Secretary of State expressed regret over the recent immigration raid in Georgia. You can see the Kospi gaining 0.6% at the open bell.
Yeah, but Shery, I mean, to your point, it's something that certainly spooked a lot of the Korean companies looking to expand to the US. But let's take a look at the open that we've got for Australia this morning, because a couple of different things we're tracking. Firstly, ANZ Bank. It's going to be very much watched in the session today. It's just been announced that they're going to be paying a record fine. They've admitted, or they've been found to have had widespread misconduct. That includes against retail, institutional divisions as well, but big focus on things like, for instance, overstating bond flows and the impact of that. I mean, it is, as we said, a major fine from ASIC, the securities watchdog in the country, but a big stock to track for us in the session today. Otherwise, a couple of other headlines that we're tracking. Firstly, relate to trade. We actually just saw the 9th dialogue being announced, high-level dialogue between US and China that's going to be taking place in Beijing later this week. I mean, ahead of that, you're taking a look at what's happening with the Aussie dollar. Fairly steady right now, but the other big thing, of course, comes on the eco front. And Australia, very sensitive to the monthly activity figures we get out of China later today and what they signal about the health of the Chinese economy as Australia's latest, or largest rather, trading partner. Stocks-wise, you're seeing the ASX 200 a little bit in the red today, but again, it is that sort of that broader question as well on the eco front. What happens with the Fed? What happens with a slew of other central banks? In Australia, you've got the August jobs data as well. I mean, notoriously a bit volatile, that data set, but we will have those figures coming up later on Thursday. And Shery, you mentioned oil as well. Actually, Brent crude pretty range-bound so far. We're sitting below the 100, 200-day moving averages, even as you have those ongoing tensions in the Middle East, but also with Ukraine continually hitting energy supplies over in Russia. But let's get more on the outlook now, bring in our next guest, who does remain positive on Asia ex-Japan equities. With us now is Vasu Menon, Managing Director of Investment Strategy, OCBC. So, Vasu, thanks very much for joining us this morning. And let's get started on that call. Why exactly you're still positive and constructive on Asia ex-Japan?
We have been positive on Asia ex-Japan for a few months, and we remain positive on the region for a number of reasons. Number one, the Fed is expected to cut rates, and historically, Fed rate cuts have augured well for Asian equity markets, which are seen as higher beta, higher risk. Fed rate cuts encourage a risk-on stance among global investors, which benefits Asia ex-Japan. I think secondly, Fed rate cuts could also cause the US dollar to weaken further. And, that is beneficial to Asia because, Asian companies do have US dollar debt, reduces the debt burden on Asia ex-Japan companies. And also Fed rate cuts accords flexibility to Asian central banks to cut interest rates. Valuations for Asia ex-Japan are not expensive at this juncture. Earnings growth is decent. And I think the overall picture, the macro as well as the micro picture for Asia ex-Japan is one that is relatively sanguine. The asset class is volatile, but I think if you take a medium-term view, it could actually outperform US equities, over the next 2-3 years.
Vasu, I like that you say Fed rate cuts because I think that really talks to the market expectation that we're setting off for an easing cycle and investors are pricing cuts well into 2026. I mean, is that your expectation, and what happens if that's tested by the Fed later this week as well?
Indeed, that's something to worry about. There's a risk that, the Fed could test market expectations, but nevertheless, we are of the view that the Fed will cut rates 3 times this year, for the rest of this year, September, October, as well as December. 2026 remains slightly uncertain because, with the Fed rate cuts, the economy will see an uplift, plus Trump's tax and spending plan kicks in on 1st January, that will also give the economy an uplift, and that could actually result in slightly higher inflation, also because the tariffs, full impact of the tariffs will come through. So all that means that 2026 is a bit more uncertain. The markets are looking at 3 rate cuts or perhaps even more in 2026. We are at this juncture holding steady, but nevertheless, we think that there will be more rate cuts in 2026 once the cycle begins. But the number of rate cuts remains uncertain. A lot hinges on how the U.S. economy and inflation plays out next year.
Given the incredible rally, especially very much concentrated in one sector of the market with tech, despite the everything rally that we saw in the last few weeks, it's really been about the AI surge, right? Does that pose a risk even if you were to get more Fed rate cuts into 2026?
Well, we think the AI rally has more legs. If you look at past technology cycles, they've lasted over, 10 years. So we are really at the early stages of the AI cycle, which really kicked off after the launch of ChatGPT at the end of 2022. So it's still early days. We think there's more upside, but clearly this sector is a sector that is very volatile, not meant for all investors. And but we think that investors should have some representation of AI in their portfolios. But having said that, I think the point you've also raised is that AI has done very well, tech has done very well, and you could see some rotation out of these sectors towards other sectors of the economy, value plays, other growth plays, maybe even small and mid-cap stocks in the coming 12, 18, 24 months. So it is not just about AI. I think going forward, you could see the rest of the market, eventually playing some degree of catch-up, although the focus has very much been on AI, in the last 6, 9, 12 months.
How much will this AI narrative help Northeast Asian stocks, where, of course, tech hardware is very important, but more specifically also perhaps Japan, where we are expecting it to diverge from the Fed and hike rates later this year as well?
Well, it will benefit, Asian tech companies without a doubt. If you see the mega cap stocks in the US, the Magnificent Seven and other big cap stocks in the US actually spending more money on AI, it will benefit, the downstream players in South Korea, in Japan. I think as far as the BOJ is concerned, I think it's holding off from hiking rates for now. We don't see the hiking rates in a big way. They will tread cautiously because I don't think the BOJ is completely convinced that inflation is demand-driven. It thinks the BOJ still thinks that inflation is very supply-driven at this juncture, more important inflation, and I think they're looking for more evidence that is demand-driven, as well as greater conviction that wage growth in Japan can continue, and the economy is also not in the best of shape at this juncture, and so we think even if the BOJ hikes rates, it will hike rate cautiously, carefully. Not as aggressive as perhaps other central banks when they hike rates in the previous cycle.
What are your expectations around what happens with treasuries and bond markets generally? I mean, we've had so many gyrations and concerns at the long end of the curve in particular. Do you see that flaring again when you've got so many central banks meeting this week? Well,
actually, the 10-year bond yields have come off, since June this year. The 10-year bond yields were about 4.59% on the US dollar, on the US treasuries, 4.59% in June. They've come off to 4.06%. So the bond markets appear to be saying that, the economy is headed for a slowdown, and that's being priced into the bond market. But you're right. I think in the medium term, you could see a divergence between the short-term rates and the longer-term rates. Fed rate cuts will benefit the shorter end of the market, but in the long end of the market, it is not just Fed rate cuts that drives where yields hit. I think it is also about fiscal sustainability, debt sustainability in the US and elsewhere in the world, and I think concerns about that could come into play in a greater way in 2026, and we could see some degree of divergence between the short end and long end, and as a consequence, the longer end yields in the US and elsewhere could actually hit slightly higher going forward, which is why we are of the view that as far as bond investments are concerned, investors should focus on the intermediate section of the market. In other words, intermediate duration. So in other words, 1 to 7 years. years. That should be the focus of investors as opposed to investing at the long end of the market, which is more susceptible to rates volatility.
Yeah, but to your point, as you said, I mean, we saw the 10-year yield just briefly below 4% for the first time since April on Friday. That was Vasu Menon, their Managing Director at OCBC. Thanks very much for joining us this morning and taking a look at the movers in the session so far as well. I mean, checking back in on what's happening with ANZ, it's lifting off the lows of the day so far, but it is still a big market move or news for that stock as well, because ANZ's looking to pay a $240 million Australian fine. That's about 160 million US, but it has admitted misconduct across its institutional and retail divisions as well. So what's being called widespread misconduct by the nation's securities regulator. So that stock there in focus. We'll have plenty more ahead on the Asia trade. This is Bloomberg.
Take a look at how South Korean assets are trading at the moment. We have seen that incredible rally when it comes to the Kospi, gaining more than 40% year to date already. And this, of course, with gains in the AI exuberance. We're talking about really the likes of SK Hynix, for example, doubling the stock price already year to date. And this also coming at a time when markets have great expectations for corporate reforms. Take a look at how brokerages are trading at the moment, given that we also had a story where South Korea has just killed its plan to lower the threshold of large shareholders subject to taxes to 1 billion won from current 5 billion won. Remember, President Lee wants the Kospi to get to 5,000. That's his goal. So we are now seeing more of these stories fueling the gains. For more, let's bring in Bloomberg Stocks reporter Yoo-Kyung Lee. Yoo-Kyung, so does this incredible rally in South Korea have legs?
Yeah, that's a good question. After 40% rally in this index of this $2.2 trillion market, does it have legs? I think a lot of investors seem to believe so, especially global investors who have added more than 4 trillion won worth of their money into Kospi last week, which was the biggest inflow since 2013, according to Goldman Sachs. So definitely there's a view that this incredible rally has more legs. And I think that optimism is coming from, yes, the AI optimism, the rally in the AI-related stocks, the chip makers that are the biggest ones in South Korea, and also a belief in the corporate reforms that will overhaul the corporate governance of the South Korean company and make make this stock market better for the overall shareholders through the better shareholder returns. So I think a lot of investors still believe that there's more legs, and maybe some are still hopeful about the Kospi 5,000 campaign that President Lee has put forward has some chance of getting there.
What about the policy that we're seeing around the tax hike plan as well? I mean, how is that also factoring in the political policies we see as well?
Yes, sure. So today's announcement that the government will scrap the proposal to lower the threshold for the capital gains tax on stocks. This is the first reversal of the policy since the President Lee took office in June, and this means the challenges for the government to balance the fiscal need as the government tries to spend more on with the more loose fiscal policy, and they need more tax revenue. And at the same time, they want to show to the market they're really committed to lifting and boosting the stock market. But this tax policy has been considered to be a hurdle to achieving that stock market policy. A lot of retail investors, their major complaints about the South Korean stock market is that the nation's stock market is a trading market, not more of a buy and hold market. And this tax policy has been seen as one of of the reasons that will spark the big sell-off among the retail investors who wanna pay lower tax, and they might wanna reduce their holdings in the domestic stock market. So retail investors are definitely welcoming the move, and yet, according to the flow data, we haven't seen them piling into the domestic stock market as aggressively as the foreign stockholder. So I think in the coming weeks, it remains to be seen whether this reversal in the tax policy will bring the retail investor back to the domestic market, as a lot of them are still interested in buying foreign stocks, especially the U.S. market one.
That was our Bloomberg stocks reporter, Yu-Kyung Lee there. And let's shift now to what's been happening over in Spain, because US and Chinese delegations are set to resume talks in Madrid on Monday. That's after a first day of meetings covered issues including trade, the fate of TikTok in the US. President Trump says the talks are going fine, but that TikTok's fate will be determined by Beijing's actions.
They're negotiating TikTok right now. We may let it die, or we may, I don't know, it depends, up to China. It doesn't matter too much. I'd like to do it for the kids. They like it. I mean, selfishly speaking, I did very well on TikTok, and I got the youth vote.
Let's bring in our Chief North Asia correspondent, Stephen Engel in Hong Kong. And Steve, it's sort of interesting because, yes, we're coming up against that TikTok deadline this week, but at the same time, TikTok hasn't always been seen as sort of issue number one for both sides. So the fact that it's so prominent in these discussions, what does that tell us? Yeah,
you would think trade and tariffs would be top national security issues, and they were discussed, obviously. But I think TikTok has been pushed up the list on the agenda simply because of that deadline. Yes, as you rightfully said, there's another deadline to find a U.S. buyer and to resolve this, or it could potentially be shut down, or there could be another extension, shut down in the United States, obviously. But again, I also think it's probably tied to laying the groundwork for a Trump-Xi meeting, possibly at the end of next month, either on the sidelines of APEC in Korea or in a state visit to China, in between perhaps ASEAN and APEC, which is in late October. And then TikTok could be a deliverable. And I think when you're dealing with trade issues, national security issues, finding deliverables, which is, of course, State Department parlance for things that you can take back to your country and say, look, we won this, or we got this. It's going to be difficult for China and the United States to have significant deliverables when they're so far apart on the key issues. So I think TikTok might be, you know, to use the overused cliche, a bit of a low-hanging fruit if they can agree on a potential U.S. buyer and resolve the data sensitivity issues and national security issues that are tied to TikTok. So it's not easy, but it could potentially be resolved quicker than their trade differences.
Yeah, not easy to resolve the chip issue as well, right? China announcing 2 investigations into the U.S. semiconductor sector. What do we know?
Yeah, so by all accounts, these talks in Madrid really went pretty well. They lasted for nearly 6 hours, and Scott Bessent has said we're going to meet again in the morning, so Monday morning in Madrid. But they could have gotten off to a pretty rocky start, because last week we saw the United States add to its entity list, including 23 new Chinese companies, including Shanghai Fudan Microelectronics and also Sino IC Technology. The entities list is the U.S. list that essentially determines companies around the world, not just Chinese. Actually, there were 32 new entrants, including 23 from China. Basically, they determine whether a company practices run contrary to U.S. national security or foreign policy. And so that could have derailed it. And then immediately after that, China, on Saturday, the Ministry of Commerce announced 2 new investigations into U.S. semiconductors. So those 2 things together could have derailed talks a little bit, or at least made them a little bit difficult at the start. Now, the details of those investigations, according to the Chinese Ministry of Commerce, is that there'll be an anti-dumping probe launched into analog IC chips. They're not cutting-edge chips, but they're in everything from smartphones to electric vehicles to medical imaging devices. So it's potentially something big for China to really latch onto. The second investigation is a probe into potentially anti-discriminatory practices by the United States in its overall limiting through executive order or whatever of chips to China. So that's a much broader investigation. We'll have to see how these two play out.
Our Chief North Asia correspondent Stephen Engel there. We have more ahead on the Asia trade. This is Bloomberg.
The top global headlines we're following this morning, and President Trump is pressing a U.S. appeals court to let him fire Federal Reserve Governor Lisa Cook over alleged mortgage fraud. A lower court last week blocked the move. Trump argues Cook offered no explanation for conflicting loan documents, while her lawyer warns removing her would shatter the Fed's independence. The ruling could come as soon as today. The Philippines, Japan and the United States have carried out joint drills in the South China Sea. The exercises included vessels and aircraft and underscore the allies' push for greater maritime security. China condemned the move and warned Manila to stop so-called provoking incidents near contested areas, including Scarborough Shoal. The US has expressed regret over the detention of hundreds of South Korean workers. Speaking in Seoul, Deputy Secretary of State Christopher Landau says the workers will face no disadvantage when re-entering the US. Over 300 South Koreans returned home on Friday on a chartered jet. That's after they were swept up in a raid carried out by US immigration officials. Australia will spend about $8 billion on a new defence hub near Perth to build Navy ships and dock nuclear submarines. Prime Minister Anthony Albanese says the project will create 10,000 jobs and strengthen the AUKUS security pact. It marks the biggest peacetime increase in defence spending in the nation's history, as Canberra seeks to shore up Trump administration support for AUKUS.
And take a look at how European futures are setting up after a muted session on Friday. Of course, they were trading sideways given the big events this week. Euro Stoxx 50 futures at the moment gaining 0.2% on a busy week, including, of course, the Federal Reserve policy decision, a cut expected this week from the Fed. And also, we're expecting the Bank of England to come out with their interest rate decision. A hold is expected in that decision, but it's already really struggling with UK inflation expectations hitting a 2-year high, which might complicate the picture for the BOE. Of course, we already had the ECB deciding on policy last week, seeming more upbeat on the euro area economy. We are also headed towards the Norges Bank interest rate decision this week as well, at a time when we have a lot of idiosyncratic news in the Eurozone, including Fitch Ratings downgrading France's credit assessment to A+ from AA-. Remember, this country is also facing rising public indebtedness and political instability. We saw a change in the premiership there last week. More ahead on the Asia trade. This is Bloomberg.
You're watching the Asia Trade this morning, and we're taking a look at what's happening in the commodity space. Look, it's not really too much movement we're seeing here in terms of the oil markets. I mean, we've got Brent and WTI sitting fairly steady this morning after advancing last week, but traders are certainly weighing any moves for this crackdown possibly on Russian flows. But you do have forecasts for a surplus later this year, so that's also playing into the dynamics. Gold, I mean, it's continued to be on a tear, but Goldman Sachs, for instance, is saying that we could see $5,000 per bullion within the coming months, and that is, of course, these questions around Fed independence and broader geopolitical tensions as well. But let's get into those geopolitical tensions, because President Trump says he's prepared to move ahead with major sanctions on Russian oil. That's if NATO countries do the same. Bloomberg managing editor Jill Deeses joins us for more. I mean, Jill, it sort of sounds simple, but it's not really so simple, because NATO countries' hands are kind of tied as well.
That's exactly right, Belle. I think what you're dealing with here is is this ongoing pressure, obviously frustration from Trump to try to bring Putin to the table here. When he's talking about these NATO allies, though, while several of these members have scaled back their purchases of Russian oil, you've got countries like Hungary, for example, which have really sort of resisted that idea of more stringent sanctions on Russia's energy sector. So when you talk about Trump saying, well, if NATO does this, then we'll come into the picture. I mean, that becomes really difficult when you kind of drill into the individual geopolitical tensions that he's dealing with there.
And really threatening 50 to 100% tariffs on China, not necessarily really a positive picture if you want a summit with Xi Jinping.
Yeah, I mean, that's right. I think that when it comes to China in particular, you're seeing a lot of that push and pull with Trump. You've got, obviously, China being a major buyer of Russian energy. You've got these threats from Trump. But yes, as you mentioned, at the same time, the Trump administration is trying to very delicately handle this, the relationship that it has with China. I mean, you've got his Treasury Secretary Scott Bessent currently meeting in Madrid with Chinese officials. There's a lot of potential progress to be made there on trade, and this ultimately could potentially pave the way for that meeting between Donald Trump and Xi Jinping, maybe sometime within the next month or so. But when you also have these threats that Trump is ultimately hoping lead to some kind of pressure to bring Putin to the table, obviously create some difficulties there. I think all of this really does just go back to the fact that the ending the war in Ukraine was something that Donald Trump had down on his agenda as something that he wanted to accomplish really day one. This has really showed how difficult that is to actually accomplish. We're now more than a month out from that meeting between Putin and Trump in Alaska, and we don't really have a whole lot more to show for it here.
Bloomberg's managing editor Jill Deasy is with the latest on the geopolitical risk around the oil markets. Let's actually get the outlook for oil and other commodities markets with Daniel Hines, senior strategist at ANZ. Daniel, what will win out here, the geopolitical premium in the oil markets or just the concerns about oversupply?
Well, I think we're at a turning point here, really, and it has been obviously those geopolitical issues which have been the focus for the market. But I think as we progress now into the fourth quarter of the year, I think that attention will start to turn to some of the fundamental issues which have been on the agenda for some time, but have obviously taken a back seat. And I think the fact that some of this is potentially wrapped up in some of those geopolitical issues. I mean, the issue around China is quite pertinent, considering that it itself has gone a long way to really keeping the market relatively tight over the course of the year so far, really sort of building its own strategic reserves of oil. Soaking up all those additional barrels, particularly Russian ones. Now I think with demand starting to peter, or demand growth starting to peter out, and the economics around Chinese restocking certainly not as favourable as they have been. I think the ability of China to really soak up those additional barrels is going to be significantly weaker, I suppose, in the coming months, and I think that will ultimately start to play on the market, despite, I suppose, these geopolitical issues still hanging over the market.
Yeah, and I guess
Daniel, if we do see the Fed also restarting its easing cycle, does that change the demand dynamics around the world, not only around oil, but just broader commodities as well?
I think it does. I mean, obviously the principles go that lowering borrowing costs means that storage of commodities becomes cheaper, and certainly over the past couple of years we've seen a lot of destocking. So inventories aren't that particularly high. Outside of China, in the oil market, for example, they're still relatively low, and I think the spectre of lower borrowing costs across the commodity markets will certainly spur a little bit of restocking, potentially sort of moving into that recovery phase of the global economy. The US in particular is held up relatively well so far, but certainly if we get through the next sort of 6 to 12 months, I think the spectre of stronger demand there will certainly entice some to restock as those lower borrowing costs come through. And And obviously, you know, the cutting of rates will certainly weigh on the dollar as well. And you know, a stronger dollar to date has been a bit of a headwind for broader commodity markets. So, yeah, I think that monetary sort of backdrop will certainly be a bit of a boost to commodity markets more broadly.
Just last question on oil there as well. I mean, what's your expectation around the price moves? Because so far we've been really range-bound. I mean, I don't think moving within a variation of more than $5 over the past month. So when you say we're at this turning point, what does that actually look like, and what's the downside potential?
Yeah, well, clearly we'll have to see some movement on inventories to really trigger some concern in the market. To date, we haven't seen a huge amount. I mean, the US, we've started to see it build up a little bit over the past few weeks, but more broadly, you know, it hasn't been really you know, clear to the market. So I think as we start to see that, that'll come in sort of many forms. But certainly that combined with you know, weaker economic data will, I suspect, be a bit of a trigger for a re-rating in the oil market. And you know, you can't obviously look at that without sort of considering the supply side issues right now. And obviously the geopolitical backdrop is challenging, but certainly you know, the physical barrels we're expecting to hit the market now over the next few months, you know, quite sizable. So you know, the market's looking very, very soft. Will continue to weaken, I think, and I suspect, you know, over the next few weeks or month or so, we'll start to see that really peter out in the data, which I think will push prices, you know, a fair bit lower to where we are at the moment.
I think the flip side, of course, to oil has been gold. I mean, it's been on a tear, and just a few days ago, I mean, you raised your price target as well. So what's your new price target, and what's driving that?
Yeah, look, I think we could certainly see 3,800, you know, over the next few months, and $4,000 an ounce is our sort of target for 2026 through this cycle. At the moment, you know, it's clearly that expectations around longer term rates. I mean, you know, the market has been pricing in obviously a cut by the Fed in September for some time, but I think the uncertainty around whether it would you know, move on a more sustainable basis over the subsequent sort of meetings and months has been you know, absent until now. And I think that combined with the political uncertainty that we have now developing does mean that you know, it does look like rates are going to continue to push lower, and I think that's really been the crux of the move so far. To date, though, we haven't really seen you know, the ETF market really join in this rally, and I think that the signs just emerging over the past week with inflows coming in quite strongly. If we did see a bit of a correction in equity markets, I suspect, you know, that pick up an ETF, gold-backed ETF demand will be quite strong, and that'll be that trigger for the additional push higher.
Daniel, how much of that demand will come from major markets like China and India? And in fact, broadening out that question as well, you alluded to China demand earlier when it comes to oil. What about broader metals, and not just gold, given, of course, the housing slump that continues there?
Yeah, I mean, China is certainly a question which you know, continues to flummox a lot in the market. You know, its metals demand has been holding up relatively well, but I suspect a lot of this has been due to you know, some sort of demand brought forward prior to the tariffs, and we've seen a little bit of support from sort of really focused stimulus measures in China. But it's you know, the broad sort of support packages just haven't been there, and I suspect we'll start to see that demand growth tail off a little bit over coming months, and that does worry me, you know, a little bit on the metal side in particular. You know, that we could see that growth just peter out. Aside from a couple of key sort of markets, which I think they'll take that more longer term view, but that sort of weakening economic backdrop there is, I suppose, the one sort of red flag that I think the market needs to keep an eye on.
Dan, thanks very much for your time this week. That was Dan Hines, Senior Commodity Strategist at ANZ. And Shery, I think it was really interesting. You picked up on that sort of question as to how much we see central banks, how much we see investors as well just adding to their gold holdings. And one of the standout markets has been Thailand, actually, this year. And really interesting against that backdrop of political instability in Thailand. Even if there is that expectation, it's sort of started to stabilise from now. But you do see gold prices, you can see in this chart here, looking a lot more correlated to the baht compared to what you have for Asian peers. But gold has been rising, the Thai baht has been rising as well, and Thais poised to buy more gold for a 5th straight year. And that's because that rally in the local currency is making gold cheaper as well.
And the caveat of that story also that we're seeing this unusual surge when it comes to Thai gold exports to Cambodia. And that's actually raising some concerns when it comes to the broader political sphere about potential money laundering as well. This export surge of around 19% from a year earlier for the first 7 months of 2025 to $2.25 billion has really raised concerns about why this huge jump is happening when it comes to exports to Cambodia, and actually triggered calls for an investigation. It's also seen as one factor fueling that rally that you talk about in the Thai baht, and that really threatening to undermine the nation's exports and tourism as well. So just a caveat to keep an eye on as we continue to follow these Southeast Asian markets and their demand for broader assets like gold, whether it's for investments or just other nefarious issues right now, that we continue to see this call for investigations.
Yeah, absolutely. But let's also take a look at what's happening in Sydney right now, because we do have the Australian Securities Regulator briefing on what has been a major fine for ANZ, one of the major local lenders in Australia as well. So ANZ looking to pay Australian $240 million fine after admitting misconduct against its institutional and retail divisions. But we do this morning hear from the chair of that ASIC speaking this morning about this fine, saying that the bank wasn't transparent with the government about its trading. It made repeated failures to rectify certain issues as well. This is the chair. You can see here Joe Longo speaking at a press conference in Sydney. We have seen the bank stock a bit under pressure this morning, but still holding up relatively well. But we'll have more ahead on the Asia trade. This is Bloomberg. We're bringing you some updates this morning on what Tencent is doing. We're hearing that they're going to be appointing banks, or they have appointed banks, for their first bond offering in 4 years. The proposed notes, they could come in varying terms and currencies, but it would add to what is nearly $18 billion in outstanding notes. It's a really interesting moment, of course, we see for issuance. I mean, Alibaba, for instance, we have $3.2 billion of zero coupon bonds, being offered last week. So increased fundraising, essentially, we see in the tech sector in China. So Tencent definitely one to track at the top, or the open rather, in China. Let's take a look as well what else is going to be very closely tracked in China today, and that's August economic data that's due out in the coming hours. It could sound the alarm on a rapid slowdown. Analysts expect weakness in industrial output, investment, offsetting a slight improvement in retail sales. Let's bring in our Asia equities reporter, Charlotte Yang. So we just heard some of the expectations there, but get into the details a little bit more, and as well how pivotal this is going to be for the stock market.
Yeah, so the macro data dawn we're having at 9:15 local time is really going to test the resolve of the equity bulls. So, for example, like you mentioned, analysts, including Bloomberg Economics, they're flagging those weakness for the month of August, and they're calling for industrial output growth to ease to 5.3% from 5.7%, and also retail sales to take a sharper dip from 3.7% down to 2.9%. That's not kind of the momentum you want to see if you're betting on a demand coming up. And on the market trading side, the key benchmarks are now already trading in the highest level in 4 or 5 years, depending on you're looking at Hong Kong or you're looking at China. So if we do actually get those weakness in the data point, that could maybe put a brake on the rally, given that so far the performance has really been fueled by better liquidity, not so much in terms of improving fundamentals. And besides macro data, geopolitics is also coming into investors' radar today, whereas the high-level authorities having those economic talks. While there's in Madrid, while there's no headline yet, any signs of progress might also be steering some of that sentiment today.
What are we expecting for the tech sector more specifically, given, of course, Bell just mentioned how Tencent is also joining the dim sum rush with that first bond sale since 2021. But broadly speaking, the AI frenzy, of course, has already led to a lot of these names rallying.
Yeah, so the sentiment for the tech sector, I think, has been incredibly bullish these past sessions. For example, if you look at Alibaba, after the shares, the southbound, the flows, they just keep coming into buying these Hong Kong tech names. Whenever there's any signs of weakness, you do have a group of deep buyers appearing. So I think for it's also key to watch whether we could be seeing more companies sort of coming out later, just taking advantage of this so far the strong performance to do share sales or convertible bonds, all types of that type of raising. But so far, I think it looks very strong sentiment-wise of how investors' appetite for Chinese tech companies. I think a lot of that has to do with just the expectations that the AI star in China is very structural, regardless of any U.S. restrictions.
Bloomberg Charlotte Yang there with the latest on what to expect from the Chinese markets. We have more ahead on the Asia trade. This is Bloomberg. Tesla's chair says Elon Musk is the only leader who's up to the task of leading the company during a transformative period in AI and robotics. Robin Denholm spoke with us about how Tesla's board came to its agreement with Musk and what he needs to do to earn his $1 trillion compensation package.
Elon put out the Master Plan 4 on the 1st of September, very auspicious day, I think, in terms of putting out the vision for the company for the next decade or more. And AI and autonomous is at the front and centre of that, both in the vehicles but also in our Optimus lineup and what we're doing from a robotics perspective as well. And so having the board's responsibility is to look at who the CEO is for the next period of time. And we believe that Elon is the right CEO for Tesla over this transformative period of time. And our view is he's a generational leader. There aren't any other people out there like Elon who can actually lead the company over this next decade or so. And so once you decide who the leader should be, you need to put in place a compensation package to incent and motivate him to actually deliver against the ambitious goals.
The motivational piece is interesting. In the course of the proxy, as you read it, a negotiation plays out, doesn't it?
Yep.
7 or 8 months. But there were sticking points on both sides. What were they?
Well, obviously, in any discussion around the future of the company, but also the future of an individual in terms of what motivates them, it's very important to understand that. And from a board perspective, from a special committee perspective, as we've outlined in the proxy, we had a very fulsome process. We had more than 10 meetings with Elon in terms of understanding what were his motivations, what does he want to do over this period of time. And having worked with him now, I've been on the board for 11 years, and Kathleen Wilson-Thompson, our other amazing special committee member, has also been working with him for the past 6 or 7 years as well. And so from our perspective, seeing him in the boardroom, but also understanding what motivates him, it's things that other people can't do. It's what the company could do that no other company could do. So those types of things are what are in this plan. And so, as you said in the outset, it is a zero compensation package unless he delivers against pretty ambitious goals for the company.
Ambitious goals that include 20 million vehicles, that include 10 million FSD, that think about 1 million robots and robo-taxis. Robin, tell us, from your experience with the 2018 pay package, the investor base really wants to understand how structurally this is different.
Yeah, so for us, the framework of the 2018 plan worked very, very effectively. And so this framework that we've put in place for the 2025 proposed compensation package has 12 tranches, 12 market cap goals, where the top goal is $8.5 trillion, and we're just over $1 trillion today. The first milestone on the market cap side is at $2 trillion. So we've got to almost double the size of the company before any of the market cap goals are actually achieved. And then it increases by $500 billion up into the last two tranches, where there's $1 trillion jump each time. And then on the operational side, to your point, Caroline, they're very ambitious. We're just over 8 million cars that have been produced and delivered at Tesla. The milestone on the vehicle side is 20 million vehicles, 10 million FSD paid subscription areas. So to me, these are ambitious goals.
And we're following big moves in shipbuilders across South Korea. President Trump tweeting that he doesn't want to frighten or disincentivize investments. Of course, we have seen $150 billion investments in a U.S. shipbuilding revitalization fund, with diplomatic tensions easing as the U.S. Deputy Secretary of State expressed regret over the immigration raid in Georgia. Bell.
Yeah, but certainly, of course, China and the US continuing to have this war over many areas, but including semiconductors. And we'll be keeping an eye on Taiwanese analog chip makers. That's as China launches an anti-dumping probe relating to certain American-made analog IC chips, and an anti-discrimination investigation, rather, into US moves against the Chinese chip makers. So Taiwanese ones to watch. Chinese ones, though, as well, could move higher as we get the open coming up in about 30 minutes from now. But that's it from the Asia trade. Our markets coverage continues as we look ahead to the start of trade in Hong Kong, Shanghai and Shenzhen.